G'day everyone, Greg Canavan with you from the Rum Rebellion here with another market update. Today I'm going to talk about gold. There's a lot going on in the gold sector and you probably don't know about it so much purely because there's been a lot happening in markets in general. Last week we had the election, the Aussie stock market rallied quite heavily with the coalition getting back in, which was not surprising given all the taxes that Labor were going to impose on various parts of the economy, especially capital gains tax. Housing with negative gearing, so we've seen a big bounce there, and iron ore prices continue to be really strong, so the big resources stocks are doing well. But as I said, there's a bit happening in the gold sector as well, and I want to talk to you about that today, given that's where I think maybe the opportunity is over the next couple of months. Before I do that though, I just wanted to remind you guys to leave some comments underneath here. Let me know what you like, what you don't like, what you'd like me to cover in the future, and feel free to subscribe to the videos as well. I've been pretty busy lately, so they've been a little bit irregular. So if you want to get them as soon as I do them, subscribe and they'll pop up on your feed. All right, let's get into it. As I said, we're going to talk about gold today, specifically the US gold price. The reason why I focus on the US dollar gold price is because that's really what the global market looks at. The Aussie dollar gold price, as you probably know, still very, very strong. There's select Aussie gold stocks doing very well, but I think you're going to see global capital move into the sector once the US dollar gold price starts moving. And a couple of charts I want to show you today indicate that we might not be too far from the next up move in the gold price. All right, with that said, let's have a look at the first chart for you. All right, the first chart I've got for you today is the US dollar gold price. As you can see, there's a nice consolidation pattern playing out for gold. I think the last time that I reviewed the gold sector, I said that gold really needs to consolidate for a few months before it can make another upward move. It's been doing that nicely over the past few months, and really what you want to see here is for gold to break out above that downward sloping trend line. So that's really above $1,300 an ounce at the moment. If we could go sideways for another few weeks, but as we reach the pointy end of that consolidation, it's really a pennant formation. Often what you see is the price is breaking out of that pattern. Usually, not always, but usually it happens in the prevailing trend, and as you can see that we've got a merging upward trend here for gold. So my view is that you'll see prices pop out of that pattern, that consolidation pattern, in the next few weeks to month. And if that happens, then I think that's a very, very bullish move for gold. So just to confirm that, or to give you a look at the underlying gold stocks, the next chart here I've got is the VanEck Gold Miners ETF. This is a ETF of the big gold miners in the US. As you can see, bottom there sharply in August, September of 2018, had a big strong rally into 2019, peaked in January, February. And then since then we've been pulling back and correcting along with the consolidation in the actual gold price. My view here is that we're forming another short-term bottom. The good news is it's a higher low, so that's an indication that we're sort of building into another upward trend for gold stocks. And so I think if you can get prices moving higher from here and put in that low, then that's obviously a positive sign. Reinforcing that, the next chart here, this one's a little bit I guess technical, so bear with me here while I try to explain it. But the point I've got here is that the relative strength index, which is the indication down the bottom of the chart, that has diverged from price, and it looks like it's a bullish divergence. So what I mean by that, if you look back in August 2018, the RSI index broke sharply down to new lows with an initial plunge in the gold price. Then it started rising while the gold price went on to make new lows. Now that's a divergence, and it indicates that even though the gold price made a new low there in sort of late August, early September, sorry, not the gold price, the gold stock index, while that made a new low in early September, it didn't indicate, or it indicated that it was actually a bottoming for the sector, and that sort of played out over the next few months. And the reason why I point that out is because something similar has happened in April. So while the index, the gold junior index, fell in April, and the RSI index made another low there. The RSI index has continued to move higher across April and May, while the index has made a new low. So that's a divergence that I think is well worth highlighting, because often when you see those divergences, it indicates that there is a final low for the index there. So my guess is that we're going to see this junior index move higher in the coming weeks, and that sort of, I guess, conforms to a breakout of the US dollar gold price and obviously the larger stocks, the GDX index moving higher as well. So let's move on now just to look at gold relative to the S&P 500. As you can see, this chart, gold stocks relative to the S&P 500 are extraordinarily cheap. Back in 2011, 2012, when gold went on its big bull run and peaked at around a bit over $1,900 US an ounce, gold stocks were very high and in hindsight very expensive relative to the S&P 500. But now it's effectively turned around the other way, and gold stocks are now very cheap compared to where the S&P 500 is. If we zoom in on that chart and just look at the last few years, you can see that gold stocks are not far away from being where they were at the bottom of the gold bear market back in 2015, early 2016, just before gold made a very strong move. So relative to the S&P 500 stocks, gold looks very, very cheap. Doesn't necessarily mean gold is going to move higher straight away. It could just mean that the S&P 500 is due for a big fall. But often when that happens, it means the fear trade is back, and gold often does well, and capital moves into gold as it gets out of the S&P 500. So that's another indication that we might be near getting ready for a big rally in the gold price. Moving on, I guess, to an asset that looks even cheaper than gold at the moment is silver. Similar situation here for the silver futures price. Put in a low towards the end of 2018 there, September, October, November, December. Then it started moving higher. We're correcting back down again. My guess is that we're forming a higher low for silver at this point. And it won't be too long before you see silver start to move higher. And if that is the case, I think you're going to see some very big moves from silver. It tends to move in a lot bigger moves than gold. And just this final chart here, the gold-silver ratio is the highest it's been since 1993, which means silver is very, very cheap relative to gold. So in conclusion there, given that US markets are still hovering around all-time highs, gold's still sort of languishing at very low prices, I think the relative valuation of gold here is quite compelling. And then if you look at the relative valuation of silver compared to gold, then that's more compelling still. So that gives you a few ideas of maybe where to position your portfolio and move some capital into over the next few months, given that global equity markets are very richly valued, very high at the moment, and I think the forgotten markets are the precious metals, and that's where we could see some interesting moves. So I'll leave it there this week and catch up with you again soon. Thank you.